Good evening. Thanks for joining us on Business 360. I'm Shireen Khan. The headlines that we're tracking for you this evening. IT stocks are hammered as AI fears haunt the industry. Nifty IT index plunges over 5%, wiping out 1.6 lakh crore rupees in market cap. The market cap of TCS drops below 10 lakh crore rupees for the first time in more than 5 years. Sensex and the Nifty end at the low point of the day as IT stocks drag the markets. The Nifty moves closer to 25,800. The Sensex declines over 550 points. The rupee strengthens by 11 paise against the dollar. FMCG major HUL largely meets estimates in Q3. Volume growth beats expectations even as revenue and margins remain soft. The company expects FY27 to be better than FY26. The Supreme Court frowns at the functioning of real estate regulatory authorities, observes it's better to abolish RERA and says it only helps builders. The top court asks all states to reflect on the purpose of RERA and see who's benefiting from the agency. U.S. House of Representatives passed a resolution to invalidate the tariffs on Canada. 6 Republican lawmakers joined the Democrats despite warnings from President Trump. The resolution will head to the Senate next and then to President Trump, who is expected to veto it. Bangladesh votes in the first election since Sheikh Hasina's ouster 18 months ago. Over 2,000 candidates across 299 seats in fray for what is the most consequential election in the last 3 decades. It's a direct face-off between Bangladesh Nationalist Party-led Tariq Rahman and a coalition of 11 parties led by the Jamaat-e-Islami. Japanese tech investor Softbank returns to profit after booking a gain of $4.2 billion from its bet on OpenAI. This helps offset price declines in the shares of Chinese ride-hailing app Didi and TikTok creator ByteDance. AI researchers are sounding the alarm bell as they walk out of major companies. A slew of high-profile employees have quit OpenAI, Anthropic and xAI in just the last few days, warning that the companies are moving too fast and downplaying the technology shortcomings. Well, let's go to the big macro story breaking on our screens. Inflation in January coming in at 2.75%. This is the new consumer price index series with FY24 as the base year. Latha joins us now to take us through what is now the new series for inflation. Latha.
Well, the inflation number quite clearly is much higher than what it would have been if we had used the old series. Our own poll threw up a number of 2.3. But at the moment, I'm not yet able to find out if what the inflation would have looked like if we had used the old series. We've got a whole mountain of data coming in, a lot of pages. I think the base is given, yes. If we had used the old one, I think the CPI index would have been 2.03. No, we still don't have it. It's the December number that we have. We do not have the January number in the old series yet. As soon as I get that, I'll apprise you. But in the new series, it's come at 2.75. My poll had thrown up 2.89. But that was not a very good, very clean number because people were guessing what the weights might be. The big surprise is food inflation. Food inflation, according to the new index and the old index, was expected to be minus 0.1 or thereabouts, 0.08. But this one has come at positive 2.13, which is a bit of a surprise. And the chances are that there is a very big weightage given to fruit in the current food basket. The weightings within the food basket has changed, although food itself has shrunk by about 9 percentage points. It used to represent 46% of the basket. Now it represents about 37% of the basket, so of the entire consumption of a household. So the weight has fallen, but within food, the weight of fruit may have risen, is the guess. And that's why you have a higher food inflation reading. Actually, we have to go through other details. I think even coconut is another factor that could have pushed up the prices. We have to wait and see how things will pan out. We have to do a more detailed study because food CPI has fallen month on month significantly. But we have to see what the changes are year on year. That's the news, really, 2.75. So we must expect that going forward as well, we are going to get slightly higher readings of the inflation number in the new series because food, which is very cheap nowadays, has a lower weightage. We must be prepared for slightly higher readings than what we were prepared for when Reserve Bank was making forecasts with the old series. I'll stop at that and then go pour through the details and come back with more.
I'll let you pour through the details, Lata, but very quickly, and this is coming in from our colleague Sapna, so let me just get you to comment on that. National level division-wise inflation rate, food and beverages at 2.11, pan, tobacco, intoxicants at 2.86, clothing and footwear 2.98, housing, water, electricity, gas and other fuels 1.53, furnishings, household equipment 1.45, health 2.19, transport 0.09, information and communication 0.16, education 3.95, restaurant and accommodation 2.87, and personal care, social protection and miscellaneous, that is 19.02, Lata.
I think that would include gold, and that may be the reason why it's high. The numbers, that breakup comes in every CPI number. And therefore, we have the combined inflation rise, exactly the numbers you said, and I guess we will be flashing it even as I speak. It is just that one number could have included, gold and silver, and that's why that's showing a high reading. We have to come in, I have to get back to the composition and get back to you as to what are the major changes that the new weights represent. But basically, even at 2.75, it's not a very high inflation. It's just, at the lower end of the 4 percentage point range given to the MPC.
Yeah.
The MPC has to keep it between 2 and 6. That is 4% plus or minus 2%. And at 2.75, it's not alarming at all, even if the inflation numbers were to rise above 3 in the months to come.
All right, Lata, we'll let you pour over the fine print, and we will, of course, have our experts joining us here to make sense of the fresh start that we've seen as far as inflation prints are concerned with the new series kicking in today. But let's talk about the other big story. Fears of AI disruption continue to haunt software and IT companies in India and around the world. Now, last week, AI firm Anthropic released a new plugin which is capable of automating several tasks, causing jitters among investors. The Nifty IT index declined over 5% today, with market cap worth 1.6 lakh crore rupees being wiped out. All the major IT stocks declining in trade today. Infosys down 6%, TCS down 5.5%, Wipro down almost 5%. The market cap of TCS is now down below the 10 lakh crore rupee mark. That's for the first time in 5 years. Rima standing by now with more on the decline and panic that we're seeing in IT stocks and the commentary that's coming in from brokerages. This is a global phenomenon, Rima. Globally, you take a look at Salesforce, Accenture, all the stocks getting hammered. And back home here in India, IT stocks being battered too. What is the view on the street?
Well, the pain in the tech sector that you're seeing today is not an India story. It's a global problem. The Nifty IT index is down 10% year to date. Heavyweights like TCS, Wipro have hit fresh 52-week lows. And now a company like TCS is down more than 10% in the last 5 years, negative 5-year returns. Global software names have cracked very sharply. You're seeing steep cuts of about 30% across some of these enterprise tech names like ServiceNow, Salesforce. Now, the Indian IT sector and the technology majors have disrupted many cycles before, whether it's Y2K to cloud. But the question this time is that whether what we're seeing in AI, and more importantly, the pace of innovation, represents just another transition, or is it a fundamentally different risk, a structural headwind? Let's get the experts in. Now, Citi says this AI shift has unique challenges, and they give you 3 reasons for that. Unlike the cloud cycle, where the Indian IT sector was the challenger, gaining share, this time it's entering in as the incumbent. The sector has doubled in size since the last major tech shift, making it more exposed to disruption rather than being the disruptor. 2, the AI's impact is far more pervasive this time. When cloud took place, it primarily reshaped infrastructure where data was being saved. But generative AI is touching coding, consulting, workflows, decision-making, and even labor pools. And finally, Citi makes the argument that the new AI revenue pools coming in from AI are still very small, still exploratory, so not enough to offset the pressure seen on legacy services. But unlike in the case of cloud, when new work came in, they were large deals. But brokerage views are still a divided house. Now, HSBC offers a counterpart. They think that LLM-driven products will not materially displace SaaS, pointing out that there are virtually no documented instances of a Fortune 500 company replacing a core SAP or a CRM platform with a standalone AI model. Two, they're saying that, there are decades of business contextual knowledge embedded in these platforms like SAP and Salesforce, and that remains a strong moat. So it's not that easy to simply replace it. What HSBC says for the Indian IT services company, the major problem is the sharp increase that we're seeing in coding productivity. Now, as of now, according to the industry estimates, productivity gains are about 8 to 10%. But the recent launch of Claude Opus 4.6 is estimated to add another 500 basis points of improvement in productivity. Now, this incremental productivity or efficiency could increase the revenue deflation, pricing pressure. But HSBC still believes the impact is not going to be very materially significant at this stage. To sum it up, HSBC says that we acknowledge this time the risks are more credible than the past cycles, but they still expect a low teens return from IT in 2026. So what is your view? Is AI an existential threat to IT services or simply the next evolution that reshapes growth rather than ending it?
AI brings up a number of opportunities. And even over the last few years, companies have stopped talking as much about help us with productivity and lower costs and are talking more about help us win in the marketplace. And that creates a completely different set of opportunities. So how we go to market is very different. The AI disruption also has been known for the last couple of years.
The risks are overblown or exaggerated, right? Is there an impact of AI on certain tasks and certain services that we have today? Yes, it has, right? But at the same breath, are there greater opportunities on how we can use AI technologies, tools, and platforms and the models, to create new offerings, new capabilities, and new services to address our client needs? The answer is big yes.
At this point in time, it makes little appeal to me to be in IT services because we really don't know the way forward. And that's, I think, the uncertainty that we have to go through. If we don't know how this will evolve, and all the points that you made about the report from Citigroup are all valid. So just stay away would be my sense for the moment.
Well, it's a divided house. Do you go in and use the fall to buy in, or do you stay out altogether? Now, the fall in IT stocks taking the Sensex and the Nifty lower. 30 Nifty stocks closing in the red today. The Sensex lost over 550 points. Mid-caps also declined in tandem with the blue chips. That's the Nifty for you, down 0.5%, 550 points lower on the Sensex. The Nifty IT, that's where we really saw the pain. That closing about 5.5% lower. The mid-cap index about 0.5% lower today. Now, the U.S. House of Representatives has voted to lift the tariffs on Canadian goods that have been imposed by President Donald Trump. 219 lawmakers voted in favor of the resolution, and here's what's interesting. 6 Republicans joined the Democrats to support it. However, the vote is mainly symbolic, as the measure still needs to be approved by the U.S. Senate and President Trump himself, who is likely to veto it. Trump has imposed 35% tariffs on imports from Canada, but most goods are exempt under the U.S.-Canada-Mexico Free Trade Agreement. Now, President Trump met Israel's Prime Minister Benjamin Netanyahu in the White House. Trump reiterated that talks with Iran will continue, but he's issued another warning that he may take action against Tehran if a nuclear deal is not arrived at. Commerce Minister Piyush Goyal has said that India will receive trade benefits for yarn and cotton similar to those granted to Bangladesh. Speaking to reporters, he confirmed there will be no tariffs on Indian exports of garments made with U.S. origin cotton, but once the India-US deal is finalized. Take a look.
जिस प्रकार से बांग्लादेश में एक सुविधा मिली है कि अगर रॉ मटेरियल अमेरिका से खरीदे, उसको प्रोसेस करके कपड़ा बना के एक्सपोर्ट करें, तो वो शून्य रेसिप्रोकल टैरिफ पे जाएगा। वही सुविधा भारत को भी है और भारत को भी मिलेगी। अभी तो हमारा फ्रेमवर्क एग्रीमेंट बना है, जब इंटरिम एग्रीमेंट फाइनल होके आएगा तब फाइन प्रिंट पे आपको ये देखने को मिल जाएगा।
Well, that's the Commerce Minister clarifying that India will also be able to avail of that clause of zero tariffs if we use US-made man-made fiber as well as US-made cotton. In earnings today, FMCG major Hindustan Unilever largely met estimates in the third quarter. Volume growth of 4% ahead of expectations. Revenue, though, did miss estimates. Margins remaining soft. The FMCG giant's shares fell in trade after reporting its earnings. The management expects FY27 to be a better year.
We are seeing an improvement in consumer sentiment and demand. This is especially led out of rural, but overall across urban and rural, demands and sentiment is improving. We don't give guidance of specific numbers, but what we are saying is that second half 26 will be better than first half 26, and 27 will be better than 26.
Well, that's HUL's Priya Nair. And more earnings. Shares of eyewear company Lenskart rose nearly 8% in trade after reporting very strong earnings in Q3. Net profit climbed over 28%. Revenue and EBITDA also witnessed double-digit growth on a sequential basis. Margins expanded by 30 basis points. So good quarter there for Lenskart. Now, the Supreme Court has come down hard on the real estate regulatory authority functioning across states. The top court has observed that the entities must be abolished in their current form. Ashmi joins us now with more. Ashmi, take us through why the Apex Court has observed that RERA should be abolished.
Well, the Supreme Court, specifically the bench headed by the Chief Justice of India, expressing his unhappiness with the conduct of RERA across various states. Bear in mind that while this observation was made today in context of a particular matter regarding the Himachal Pradesh RERA looking to shift their office, the CJI-led bench of the Apex Court has been hearing matters involving real estate companies across states, including matters like the Amrapali matter stretching across the state of UP as well. And here, previously as well, we've seen the CJI expressing grave reservations on the way RERA has been conducting itself. As a part of today's observations, the Chief Justice of India made known his displeasure when he said that as far as the conduct of RERA is concerned, it should be abolished altogether, that there needs to be a rethink specifically by states to look at as to who RERA is benefiting. In fact, at one point, the CJI also mentioned that from the conduct of RERA, it appears to be helping only real estate developers who have slid into default and not really helping anyone else, not really helping the home buyers, that there is a need for a rethink at a policy level. At the state level as well, there needs to be a rethink in terms of why RERA was introduced in the first place, because it's not really discharging the function of guarding the interests of home buyers. So clearly, strong reservations being expressed by the Chief Justice of India. And again, coming not just in context of any one particular state, but broadly across the whole host of real estate matters that he has been hearing, that the Supreme Court has been hearing, stretching across multiple states.
All right, Ashmit, many thanks for joining us. Up next, AI researchers are sounding the alarm bell as they walk out of major companies. That story and more when we return. Well, the big international story, Bangladesh votes today in what is being described as the most consequential election the country has witnessed in the last 3 decades. This is also the first polling exercise since the dramatic ouster of former Prime Minister Sheikh Hasina 18 months ago. Over 2,000 candidates across 299 constituencies in the fray. Voting in one constituency was postponed due to the death of a candidate. Sheikh Hasina's Awami League was banned from the election process. The election crystallized into a direct showdown between the Bangladesh Nationalist Party, led by Tariq Rahman, son of former Prime Minister late Khalida Zia, and an 11-party coalition spearheaded by the Jamaat-e-Islami. Softbank has posted a profit of $1.6 billion in the third quarter. The Japanese investment major also reported a $2.4 billion gain at its Vision Fund. Now, this is a sharp rise in the value of its OpenAI investment, which has helped cushion losses in other parts of its portfolio. The firm said it booked $4.2 billion gain from OpenAI during its fiscal third quarter. A flurry of AI researchers have been sounding the alarm bell as they walk out of major companies. A slew of high-profile employees have quit OpenAI, Anthropic and XAI all in the last few days. Shilpa joins us now to explain to us what is leading to these resignations. Shilpa.
Well, you know, across the AI industry, some of the loudest warnings right now are coming about the downside of AI, and they're not coming from regulators, but from within, or rather, should I say, former employees who have walked away from some of the biggest AI companies. Now, let's look at some of the recent spate of exits. At OpenAI, researcher Zoe Hitzig, she quit on the 11th of February via an essay in the New York Times with a stark message that once advertising enters a system that has been built on intimate human conversations, the incentives will change. She wants that ChatGPT holds what she calls the archive of human candor, deeply personal disclosures about health, relationships and beliefs, and monetizing that environment could create pressures that are hard to contain even if today's leadership has good intentions. Now at Anthropic, Mrinank Sharma, who led the Safeguards research team, he stepped out with a rather dramatic yet cryptic letter warning that the world is in peril from crises that go beyond just AI. Now, he hinted at challenges in upholding values amid pressures to accelerate and commercialize AI, given the speed with which it's evolving. Now, after leaving Anthropic, he said that he may pursue poetry and devote himself to the practice of what he calls courageous speech, which could signal a desire to be able to speak more openly and honestly about risks. Then there is Elon Musk's XAI. Two co-founders there resigned in 24 hours within 24 hours this week, and that took the total tally of the founding exits to half of the original team in just over the past 2 years. And several members of the technical team also resigned since the beginning of this year. Now, reports point to internal tensions over model performance and the race to catch up with OpenAI and with Anthropic. Musk, however, he's downplayed the departures. He called it a reorganization to improve the speed of execution. And the company, he has been reorganized now, and it has been split into 4 units, from Grok chatbot to a new project called MicroHeart, and with ambitious as bold as designing rocket engines through AI. Now, if you look at all of these together, these exits, they reveal deeper fault line in the AI boom and questions that as capital and competition and scale accelerate, can safety principles and long-term guardrails keep up? Well, that debate seems to be now moving from research labs into the boardroom. Back to you.
All right, Shilpa, many thanks for joining us. Now, India's Defence Acquisition Council has approved procurement worth 3.6 lakh crores. This includes acquiring Rafale multi-role fighter aircraft, combat missiles and high-altitude pseudo-satellites. So that's a big clearance there coming in from the Defence Acquisition Council. And before we wrap, the budget day viewership numbers are in, and it is final. As always, India watched the budget with CNBC-TV18 on CNBC-TV18. CNBC-TV18's unparalleled dominance continues as it continues to knock the competition out of the park on budget day. CNBC-TV18 is the clear number one with a viewership of 83.5% during the finance minister's budget speech. Your channel was miles ahead of competition, and it was the most watched English business news channel during the budget week with a whopping 85.3 viewership and an almost 80% viewership through budget day. Big day, big impact, and a big thank you to all of our viewers for your consistent patronage, your trust in us, and your continued support and feedback. We don't take it for granted, and we will always take it seriously. So once again, from the entire CNBC-TV18 team, thank you so much for tuning in to us on Budget Day and the Budget Week.